Hi guys, welcome back to the channel, the Daily Forex. Today's video, I'm going to show you guys a strategy that you can use to grow your small accounts into big accounts on boom and crash indices. All right, now we're going to start on crash 500 index, and I'm going to show you guys the parameters for this strategy. First and foremost, go over to the indicator section. You want to put on moving average on the main window. So you put that on period 20, shift to 0, method simple, then you apply to close. The style, you put it on 3 pixels with color blue with this first red line. You click on done. When you're done with that, then you put on the moving average of oscillator on indicator window 1. All right. You click on indicator window 1, you select the moving average of oscillator. All right. When you select the moving average of oscillator, fast EMA you put on 12, slow EMA 26, MACD SMA you put that on 9, then you apply to close. All right. Then for the style, you want to put that 3 pixels with color red or any color of your choice as long as you understand what you are doing. Okay. Then you click on done. Then you put on the moving average after the moving average of oscillator. You put the period to 26, shift 0, method simple. Then you apply to close. The style, you put that on 3 pixel with color green. Then you click on done with this first red line. All right. Then the last indicator, moving average again. Okay. So we're using series of moving averages. Period is going to be 12. Shift is going to be 0. Method simple. Then you apply to close. All right. Then for the style, you put that on 3 pixel with color black. Okay. Then with this first red line, then you click on done. All right. Now with this strategy, we're going to be mainly using the higher time frame and the lower time frame, like the 1 minute time frame, 5 minute, 1 hour time frame. All right. Together with this setup. Okay. Now I'm going to explain how you can, use this. Now, first and foremost, what we're going to observe in this market is, series of spikes. We're going to be looking at the spikes on the market, okay? Since we're going to be trading the candles, not cashing the spikes, we're going to be trading the candles. That's how we're going to be using this to grow our small account, all right? And we're going to be doing this in a very safe way so that we don't end up getting caught up with a spike, okay? Now, we're going to be observing the spike on the market. Now, the only time you want to enter into the market is when you observe that, okay, the market have spiked for a very long period of time, like a very long sell in the market. That's when you're going to enter into the market for a buy. Now, take a look here. This red line we're seeing right here is the moving average of oscillator. Then this green and this black line are the moving average we added on indicator window 1. While this one on the main chart is the moving average we added on the main chart. All right. Now, as you can see at this point in time, here is the overbought zone, right? And you can see from this point here down towards this direction here was a very long sell, just as you can see right now. So you want to observe for a very long period of sell. You don't just want to enter into the market for any buy entry you see, okay? So you are only doing this on perfect entries alone, perfect entries when you see. Now, you can take a look at this point right here. When these two moving average meet at this zone, below, the moving average of oscillator, take a look from this point here, from here, which we can see now from this point here down to this point, a very long period of sell. Now, as you can see, it was at this point whereby the black line of the moving average and the green line of the moving average meet together at this point at the level of 10. So this is level of 10. If you add the moving average, it will show you that same level of 10. All right, but I didn't add the moving average because I don't want, the chart to be a little bit sketchy. Okay, but you understand what I'm saying. All right, now overbought, oversold, overbought region, oversold, overbought. Now, as you can see, now when you're doing this, you want to make sure that you're doing this on the third zoom level. You can see it was at this point right here when the black line crosses above this green line, then you go in for your buy. All right, you go in for a buy. You take between 5 and 10 candlesticks. Okay, you want to make sure that you only stick to that so that you be, safe on the market. Okay, now something about boom and crash market. Now, mainly on the crash markets, once the market have sold, for a certain amount of time, when the market have sold, for many sales, the market tends to buy a little bit, even though that the market is going to sell again. So you only go in once you have observed that okay, this market have sold for a very long period of time, that's when you go in for the market and place your buy entry. Now you can see that from here, price sold for a very long period of time from this point down to here. Now, if you move, you can see market bought for a very long period of time. So we're only targeting, this zone, okay? This zone. Now, it is unlikely for a market to sell on crash for a very long period of time without buying for, that same amount period of time, okay? Now, since you're already going for that short-term buy alone, you want to wait and observe and see, okay, this market have sold for a very long period of time. Now it's time for me to buy. Buyer's time, okay? That's going to be the buyer's zone. You go in, place your buy, you scalp, take small profit, and you're out of the market. All right. You go in for after, the market have sold for a very long period of time, overbought zone. Now you can see this is the overbought zone. Let's zoom out a little bit. Now price hits this high here. It's sold for a very long period, very long sell. It buy a little bit again. It's sold. Okay. Now you want to watch out for multiple, multiple spikes. Now, take a look. We're going to be expecting a spike right here because the market have sold here. You can see this is how you know that the market is going to sell for you to avoid and for you to place a buy. Now, market have bought and sold here. You can see it created another buy and it did not, end up at this said, this position. Instead, it reversed here. You can see this high was higher than this high here. Now it dropped again and it sold for another sell. You can see another sell. Now we're expecting a sell here as well. And you can see it was at this point here, the moving average of oscillator started creating a downward trend, just as you can see here, start creating a downward trend here. Before the sell came through. It bought here, started creating a downward trend, shorting towards the downward. There was a sell. Now it started again here. Now we're going to be expecting another sell again. Now the perfect zone is when you see, all right. Remember that I zoomed in, we're reaching the third zoom level. So now this moving average here crosses below this below the moving average of oscillator. Then this moving average crosses above this other one. You go in from this point here. You start counting your buys. All right. From this point here, once you see, you start counting your buys, 5, 10 candlesticks, and you want to make sure that you observe the higher time frame. For example, let's go over to the 5-minute time frame. All right. Now the 5-minute time frame tell us, give us a better picture in this. Now, when you're using the 5-minute time frame, you do not use the indicators. So you only use strictly on your technical analysis, the observation to observe the market and see where the next price movement will be. Okay. Now you can see that from this point in time, the market bought for a very long period of time, then it sold again back to this zone here. Now price is going to buy a little bit. Now you do not want to buy. This is where you avoid placing your buys because the market have already bought for a very long period of time. So you want to avoid placing buys, okay? And you want to avoid placing sell. You do not sell, you do not buy. Only when you buy is, for example, let's say, okay, you meet the market at this position right now. All right, you meet the market at this position, then you immediately place your buy because you already know that the market is going to buy a little bit, okay? Market is going to buy a little bit, then you exit again and you wait again for another opportunity when you see that the market has spiked again for another long spike before you go in. Same thing at the higher time frame. All right, you can see the higher time frame, the market have sold for a very long period of time. The market should buy again for that same period of time. But since you don't have enough, that kind of capital to hold on to the market, stability, you only go in for short-term buys alone. You scalp the market, take advantage of that small price movements, and you're out. Now you go over to the 1-minute time frame. The market will soon sell, but you're not looking for a sell. You're only looking for short-term buys. So immediately you see, all right, that this moving average here crosses this other moving average at this very point at this level below the moving average of oscillator. You immediately start buying the market between 5 and 10 candlesticks. Between 5 and 10 candlesticks. The moving average, both moving average has to be below, all right, below the moving average of oscillator. It has to be below the downtrend. The downtrend, okay? So what I mean by below, it doesn't mean it has to be below this downtrend. These are the downtrends, so they have to be below. Here, you can see a very, long both, not just one, both has to be below it. That's when you go in for your, as you can see, below it. You can see charting it from here now, you go in for your buy, short-term buys. Okay, so you do that observation on the market. You don't do that observation, you immediately go into the market for a buy. Okay, you target short-term buys, so don't not go in for a long-term buy. All right, now if we go over to the current market trend right now, remember I told you this is the moving average of oscillator. This is the moving averages. Below, crossing below this moving average of oscillator, at this very point, you go in. Okay, so both of your lines need to be below. I hope you understand what I'm saying, guys. Both lines of the moving average has to be below the moving average of oscillator. They have to be below it because it was at that level whereby both lines are below the moving average of oscillator. That's going to be your oversold zone. So it's time for buyers to enter into the market and buy. Okay, and buy. All right, I hope you understand everything that I've said to you guys. If you found value in this video, do it to like and subscribe, and also guys, join my Telegram community. It's Daily Forex on Telegram. On my Telegram community, I share with you guys tips and strategies on how to trade, and also give you guys free daily signals on Forex and synthetic indices. All right, boom and crash trading as well. Do it to like and subscribe. I'll see you guys on the next video.